Hi everyone, welcome to Age1 Consulting. Today we want to talk about the new tax law and how it affects small business owners, particularly sole proprietorship businesses. And this new tax law is what is called the Nigeria Presumptive Tax Regulations 2026 as introduced by the Nigerian Tax Act 2025. In this presentation, you get to know all what you need to know about this new tax law. Now, what is presumptive tax? Presumptive tax is payable by a taxable person who runs a sole proprietorship business where it is difficult to determine the actual income of the business, or where proper accounting records of the business is not maintained to enable an accurate tax assessment. Now, this presumptive tax targets the informal sectors, businesses that are not yet structured in terms of their finances. And most of these businesses are small, medium, and micro businesses. And because of this, the tax official representing the tax authority will give an estimate of your revenue based on what we call the best of judgment. As we continue in this slide, we'll get to where we are going to see those factors they use when they are using the best of judgment. So simply put, no records mean tax authority determines how much you earn in a year. All right, let's talk about the affected businesses. Affected businesses are mostly freelancers, shop owners, hairdressers and barbers, fashion designers, POS, mechanic, food vendor. All of these are micro businesses. And one thing about this law is that you can be exempted if your actual revenue or your estimated revenue is less than 12 million naira in a year. Then you'll be exempted from this and you'll be subject to pay 0% tax for the year. So all of these market traders, other small business owners generally, and SMEs contribute about 80% to the economy of Nigeria. That's why it is particular for you to know. Now, let's talk about how much tax is payable as an SME. This new tax law introduced an income tax of 1% payable on your actual or estimated income. This time around, it is your actual or estimated revenue, not your net income. So, assuming you make the sale of 20 million in a year, you are subject to 1% of that 20 million. That is, you are paying 200,000 naira in a year. So, and this new tax law also introduced another tax about capital gain tax. That is, you are paying 2% of the transaction consideration. Let's say you made a sale of an asset, you sold an asset, which can be land, building, your shop, or shares or intangible properties. You are subject to pay 2% on the transaction consideration and not the net proceed. So these are the new tax rates that is being introduced by this presumptive tax. Now, how does the tax authority estimate your turnover? Just as I said, the tax official representing the tax authority, if they could not gather enough or adequate information, they use best of judgment. And what are those factors they put together to judge you? One of it is the nature of your business. They examine the nature of your business to give you a best of judgment. They look at the lifestyle of the business owner. They examine your social media. They see the kind of lifestyle and they are inquisitive about how do you get the finances to finance this lifestyle. They look at the assets of the business. What are the assets that you have as a small or micro businesses? And they look at the location of the business. They also look at the volume of transaction, the cash and the electronic transactions. They look your bank statement to see how money is coming in and out to give us an estimated revenue. Most of the time, this estimated revenue are always overestimated. That's why you need to consider keeping proper accounting records so that you can be charged to tax based on your actual revenue. So there are some circumstances whereby your annual turnover might not be easy to estimate. In that case, the tax authority estimates your turnover for a day and they multiply it by 300 days. That is 300 days makes working days that makes a relevant year of assessment, and that's how they come about your annual turnover. Now, let's talk about those who are exempted from presumptive tax regime. The number one of them is the nano businesses. Nano businesses are those businesses that does not have fixed business premises or no former employees and an annual turnover not exceeding 12 million naira. Any business, small business that does not have a permanent place or business premises that they are moving from one place to another, they are called nano businesses and they are subject to 0% tax and they are not subject to this presumptive tax. Example of them are listed here. We have hawkers of sachet pure water, wheelbarrow pushers, car wash boys, tailor using manual sewing machines, no kiosk or markets. All of these are not subject to presumptive tax. Now, what are other exempted businesses? You, as a micro or small business, this should be of interest to you. If your actual or estimated revenue is less than 12 million naira, then you are not subject to presumptive tax. You are subject to 0% tax. And every other business exempted under Section 162 of the Nigerian Tax 2025. Now, why keeping proper records matter? Even though you are a small business, it is advisable that you keep records of all your transactions because it will help you to pay tax based on your actual business performance and not an overestimated revenue. And also reduce the risk of estimated tax assessment. Understand your business profitability to compare, to check the trend, whether there is growth or there is no growth. Improve access to loans and investments. Stay compliant with tax law. All of these are the benefits of keeping proper accounting records. So now, what is the key takeaway for you as a business owner? One, this PTR is designed to improve tax compliance among businesses that do not maintain adequate record. Just as I said, the target of this tax is to those in the informal sector, those who their actual income is a little bit difficult to estimate. So it is advisable that you keep proper accounting records. If you can prove your numbers, you reduce the chances of someone estimating them for you. Seek professional advice where necessary to ensure compliance and avoid unnecessary tax liability. That is why we are A1 Consulting. Understand whether your business qualifies for an exemption and keep proper accounting records. Thank you for following me till this time. We are A1 Consulting. If you find this section insightful, you can follow us on our YouTube page at A1 Consulting or on our LinkedIn at A1 Consulting or on every of our social media page. Thank you.